beginning to look attractive now.
Okay.
Actually, Axis is the only one that is in the green. In fact, I think of what 25 listed banking stocks, only 5 are in the green at this point in time. Relatively small ones like Dhanlakshmi, Punjab Sindh and SBBJ, other than Axis, which has, okay, 0.2%. It's a bad day for banks, quite a bad day.
Oh yes, it is. The bank nifty is down almost 1%. But in terms of valuations, Nilesh, how is our market stacked up now? I mean, what is your own Sensex EPS estimates? And do you think that it could be scaled down further purely because earnings have not picked up as much?
Sonia, very unlikely that from here the EPS estimates for the Sensex will get revised downwards. Okay. Clearly, I believe that the Q4 earnings were perhaps the last nail in the coffin as far as the earnings estimates are concerned. We clearly believe the mood has shifted decisively. So I think clearly from upgrades same time last year, we're now witnessing a lot of downgrades. And I think the street really expects that the earnings recovery is going to basically get postponed by a few more quarters. But our own sense is that, that seems to be a very unlikely scenario if you assume that, of course, the H1 is going to be a soft and a weak H1 for corporate earnings. But our own sense is that you would beginning to see economic recovery shape up in sometime in the second half. So to us, I think it's quite possible that in the second half, corporate India could positively surprise because we believe that expectations right now are on the lower side. Of course, this is assuming that the monsoons don't play truant and some of the other negatives which have been there. But I think on the whole, we clearly believe that the worst seems to be over for earnings. In terms of valuations, markets which were trading at premium to long-term averages, you clearly seen some bit of mean reversion happen. Markets are now trading around the long-term averages itself. And so if the markets correct by maybe another 4 to 5%, from here on, markets would actually be trading at a discount to long-term averages. Okay. So I think investors perhaps are likely to enter into some kind of a benign scenario a couple of quarters down the line, where there is potential for earnings upgrade and markets are trading at a discount to long-term averages. This, I think, is a very, very benign combination as far as medium to long-term investors are concerned.
Okay. Well, your long-time favorite have been the tech stocks. But even these usually safe bets began to show some cracks in terms of being able to match up to global competition. How much money would you put in 100 rupee in tech stocks, and what would be the pecking order?
Well, I clearly believe again that the valuations in the technology space again have become very attractive. I think clearly right now there is to some extent a lot of disbelief in the ability of big technology companies to really match up to global competition and have an impact. There are apprehensions whether there is enough pricing power with them. There are apprehensions whether they will be able to reinvent themselves and be able to deliver cutting-edge technology solutions to their customers. But we think that these are phases through which the technology sector has gone through over the last 10 to 15 years. I mean, every 2-3 years, they get challenged by a new development in the technology space and therefore a new opportunity. Our own sense is that the big technology boys are gearing up themselves very well for the emerging scenario, be it in digital, social, mobility, analytics, cloud. I think these are the big opportunities, or be it design thinking and some of these other opportunities which are presented. So our own sense is that the technology companies are well positioned. We think at this stage, amongst the big boys, it looks like Infosys seems to be ahead of the curve in terms of preparing itself for the future. And I think we haven't heard for a very long time, say, the Infosys CEO saying, we're very confident of meeting our guidance for this year. I mean, I've not heard this kind of a statement in the last 2-3 years. So to that extent, you're clearly seeing a new leadership at Infosys with an aspiration, with a commitment, and I think a renewed confidence in its ability to meet the challenges of the future. So clearly, I think the best bet or the big favorite out there would be Infosys.
Any disclosure so far?
No, we don't own any of these stocks.
Okay, if we have time to squeeze in one last question, then on Sun Pharma, I mean, that stock is now gone from 1200 to 850 before you know it. Any thoughts on how to approach biggies like Sun Pharma?
I probably think one needs to adopt a wait and watch approach in terms of some of these bigger names which are very expensive as well. They're not trading at cheap valuations, and again they're confronting an event risk. And the reality is that as we speak to a lot of pharma companies, I think clearly the US FDA doesn't seem to be in any hurry to kind of give clearances.
Okay.
You know, and so that period which used to be 12 to 18 months for an approval seems to be now very well extended beyond 24 months and more like 30 to 36 months. That's a very long time frame. You could easily get carried away with the long pipeline of product approvals which are awaited. So every company could say we have 30 approvals awaited, we have 50 approvals awaited. But honestly, that's something which might still take some time. So of course, you could have some technical pullbacks in these stocks. But I think one should probably be very, very careful of some of these very big pharma companies which are trading at really very high valuations.
In that case, what would you bet on in the mid-cap space?
I think within the mid-cap space, again, there are very interesting pharma companies which are not necessarily dependent on the US FDA, but there could be pharma companies which are really more focused on either India or rest of the world emerging markets, or a combination of both, which really do not have overhang of regulatory issues. And I think where even one product success for them could mean a lot, versus for a Sun Pharma or a Lupin, one product success may not mean a lot given that the base is so high, whereas
Is
for a
Glenmark
smaller...
on your mind?
Well, that's one of the companies. They well capitalized themselves. They've done a QIP and things of that kind. But I think clearly, I think that's one area. I think on the mid-cap IT side, again, there could be value emerging as some of these companies are very, very focused. So I think on the mid-cap side, there are a whole bunch of companies, technology, pharma, consumer. We clearly believe that, you know, if post a correction, I think some of the cement names will start looking attractive if the investment cycle really picks up and road construction activity picks up. I think clearly that's one pocket which, if post a correction of maybe say 10-15%, could begin to offer value.
All right, Nilesh, thank you for discussing all of those sectors and stocks with us.
My pleasure.
We hope that some of these stocks offer value in the times to come.